and the EU, and those economies haven't been going so well.
Well, just particularly on dairy, the report does predict some big surges in primary production returns over the next year, including a whopping 14% lift for dairying. But how plausible is that dairy? Is it that dairy could lift production by this much?
Yeah, it seems a little bit high in my eyes, to be honest. I think their assumptions were based around a recovery from the drought and sort of a growth in dairy production in general. So, I think 14% is a little bit high. We generally, probably 3 to 4% increases is pretty strong unless we see a whole lot of dairy conversions come on board. Then, which doesn't seem to be happening. Then, it does seem a little bit on the high side.
Yeah. So conversions have slowed down.
Well, they slowed down through the financial crisis, and they're starting to. Seems like there's a few that are occurring now, but definitely not to the same extent that we saw through 2008. So, whether or not we'll see those massive production increases yet to be seen, but probably not expecting to see it just yet.
A lot of MAF's optimism seems to be based on the Chinese boom, with the report pointing out that the value of our primary product exports there rose 49% last year. That's about $2.19 billion, I think, on the year before. We're not placing too much faith in that market, though, are we?
Well, I mean, there is a risk that we're quite reliant on China, but a lot of countries are at the moment. Australia being one of those places. I mean, China has been driving a lot of the growth for us here in New Zealand, especially in agriculture. And it's hard not to become quite reliant on that. But I suppose in terms of dairy, then we're going to continue to see a big focus coming from China. But the good thing that I do see is that we're quite well diversified across other countries and other emerging economies, some of the oil-producing countries and the traditional economies like the US and into the EU. So, there are some positives there, but you expect to see China amongst the mix for a while.
Just still on the report, though, Jeff, can you see anything which could derail these predicted extra earnings?
Well, I think the currency that they were predicting, was it 51 cents that Treasury were using? Was that MAF? But I just think they're overly optimistic. I mean, having listened to MAF reports 25 years ago, I almost lost most of my money on a kiwi fruit farm.
Oh, really?
Yeah. So I'm always a bit weary about long-term predictions on currency or export.
Well, they're quite
markets.
a way out into the future too, aren't they?
Look, if you looked at investment markets, kind of 97, 98, if you were a New Zealand dollar investor and you were investing in international shares, you were probably making 20-25% a year, 3 years in a row. In the last 10 years, if you've been investing in international shares, pretty much it's a big fat zero.
Yeah.
So, yes, you can look at 50-year data saying on the average the US market goes up 10% a year, but for the last decade it's done zero.
Yeah.
And that's the real danger when you start looking at long-term, price trends. They can change dramatically.
Indeed, there are so many factors at play, aren't there? Now, GDP results are due out on Thursday, James, so we have to speculate here a bit. But it is expected the economy would have expanded by 0.5% in the quarter to March. That's the fourth of successive growth, I understand. What's led to this general recovery?
Well, I think the difference between this particular quarter and as opposed to previous quarters is we're going to see a bit more of a broadening and increase, I guess, across the economy. So over the past couple of quarters, agriculture's been the real strength come out of it, and it's been really patchy. But this particular quarter, then we might just see a bit more of a broadening across manufacturing, across construction, those sorts of things. But still some weakness from the drought, especially in Northland, and some weakness sort of emerging from the real estate sort of sector. So they're the two things to watch. But I guess the good news is that it's going to be more broadening, although still relatively weak in context.
And business confidence seems to be gaining, doesn't it, Jeff? More jobs available in the market, unemployment down. Surely good news for the country.
All good.
Which does seem to back up the MAF's optimism in their report.
Yep. And I mean, we're lucky, as we said, I think last time, is our nearest neighbour, Australia, is going gangbusters. So I mean, as long as they're doing well, we're going to do well.
Yeah, exactly.
I mean, if they were doing it, if we were next door to Europe at the moment, our economy would be entirely different.
Right.
So
we're doing very well out of just digging the ground up across the ditch, basically,
pretty
aren't we,
much,
and sending it off to China. Yeah. Are there any surprises arising from this report, James, though, for the ag sector? I mean, the drought would have had a bit of an impact on overall numbers, wouldn't it?
Yeah, I mean, the interesting pieces that I find out of the MEF reports are sometimes at the front, and they talk about some of the issues that are facing the agricultural sector. And this year they brought up carbon, they brought up water, they brought up that we've been selling commodity products overseas for a while, and people expect to see a clean green image, and we've got to be careful to retain that. So I think they're sort of the issues that were brought up. I mean, when you look at some of the price forecasts that they've got, then they go out a long time. A lot can change, as we know, in a short period of time. And but really, the pieces at the front about what consumers are wanting and some of the things that we need to concentrate on were quite interesting, I thought.
Yeah. Now, Jeff, let's shift to Alan Hubbard, who's taken a battering over the last couple of days with the news that the SFO is investigating his Aorangi security companies and 7, I think, other associated charities. And this all comes along just as South Canterbury Finance was trying to secure debentures and non-guaranteed unsecured deposits as part of its rescue plan. Where does this leave this somewhat embattled finance company now? Will it hinder its ability to raise money?
Well, markets are built on confidence, so anything that destabilises confidence, if it's the cornerstone shareholding or some of the transactions that have gone on, isn't going to be good for trying to raise money. So I would think that without a government guarantee, they will struggle to get rollover on their debentures.
But one piece of capital, I guess, that Alan Hubbard's got is a great deal of goodwill towards him and his entities in the South Island, particularly.
True, but I mean, we put out a research report in 2004 which warned about some of the dangers in the finance company sector, and some of the issues were related party transactions and the lack of transparency, and I guess that's what the Serious Fraud Office is concerned about. I mean, my guess is that they are thinking that the Aorangi Securities has actually been propping up South Canterbury. And there's no criticism of Alan Hubbard, but sometimes with private clients, I see the way that they treat perhaps joint assets or their trust assets, and they kind of intermingle. So, you could take a trust asset and put some money in your joint bank account and do a transaction and forget to do the paper trail. There's no intention of fraud, it's just kind of bad bookkeeping. And stuff that you might have done 4 or 5 years ago, which would have been, the norm, is not the norm now. We're in a different world, and you need to see that stuff's at arm's length. It's completely disclosed. It's transparent, and I guess that's the problem.
Now, the Brits have what is being touted as a mini budget. I'd call it a maxi budget from what I'm hearing.
An emergency budget.
Which has been released overnight just before we came into record, really. Jeff, there's been a lot of speculation about what could be in it to reduce spending and curb debt. What actually has happened in Westminster overnight?
Okay, basically, you've got about £155 billion shortfall this year between income and expenditure, and the question is, how do you shrink that? And basically the numbers, it will take the rest of this decade to shrink that back to a kind of a balanced budget. So cutting back on welfare, cutting back on expenditure, cutting back on public servants' wages, cutting company taxes to try and stimulate small and business.
They've done all that, haven't they?
All of those things. So you basically
and they put up VAT.
VAT's gone up from 17.5 to 20, but it's still exempt, I think, on children's clothing and food. The company tax rate's 28, and they will cut it at 1% a year for the next 3 years, so that puts it at 25. And they've got a small company tax rate at 20 to try and help stimulate small and medium-sized businesses.
Right.
I mean, what it really shows is what happens when you become overly reliant on one part of the economy. So in the UK, it's been the banking and finance sector which tended to dominate the last decade, and it spewed out all this money in extra bonuses and profits. And once that disintegrated, you've just got this huge hole on the revenue side, but you've got this expenditure that's gone on, and so you have to kind of make cuts. And so public servants, I mean, they're going to have to. There's a wage freeze for 2 years. They're going to cut back on middle income welfare, child payments. It's a bit like working for families. All those things have to be attacked. I mean, the money has to be got from somewhere.
Well, also, aren't they being asked to make the public servants people make higher contributions to their own superannuation schemes.
Exactly, yeah. I mean, I saw some figures the other day that said that the cost of, like, the judges